this is a young person's market right now, for better or worse. And so I just read in the past year Michael Lewis's book Next, The Future Just Happened, and it was about the internet bubble. And I think he wrote it, I don't know, 2001 or 2002, just afterwards. And he wrote how anytime there's a technology shift, it will never be the old people will never get it. It'll always be the young people. So he said this, and I thought this quote was perfect. He said, "A child still has time to save himself. To a child, being on the wrong end of a trend is not a sign that it's time to dig in and defend the old position. It's a signal to cut and run. Progress depends on these small acts of treason." And of course, as Lewis has always done, the way he says it is so great. I guess maybe using the word treason right now is kind of iffy, but that's kind of the way I feel about what a market is shifting under us. And of course, that doesn't mean like, well, markets aren't going to crash. But things are happening so much faster now, and fiscal and monetary policy is part of the markets, that I don't see how you can just ignore those things and say, well, just wait till we go back to the way things used to be. That's not,
Right.
it's not coming back.
It's never going to happen. So Corey wrote in one of his pieces, I think this was his fourth quarter commentary. He said, "When do dynamics shift from prices reflecting the aggregate forward-looking expectations of the crowd to a simple ledger of transactions reflecting clearing prices driven by supply and demand imbalances?" And he spoke about, I mean, obviously flows into index funds, we don't even need to go there. But what about target date funds that are represent trillions of dollars, and all the hedging that goes on, and the way that we get access to markets? It is different today than it was in the past. Does that render past data useless? I wouldn't go that far, but you got to take into account that something has changed.
On the podcast he did with Joe Weisenthal and Tracy Alloway, Tracy said flows over pros.
Love it.
And basically the flows are causing markets to move. And so in the past, we didn't have 401ks and IRAs and target date funds and automated investing platforms that automatically rebalance. And those
free trading and social media. If you don't think that's changed the marketplace, look at GameStop.
I mean, this is a story. We're 4 weeks into the year. This is the story of the year, and it may remain. I don't know what else is going to happen, but this is like the opposite of oil going negative, I guess. GameStop.
Yeah, and we'll get all to that in a second. One example that Corey gave in his piece about changing market dynamics, I can't imagine this is cherry picking. I mean, something fundamentally changed. He shows the chart of SPY of intraday versus overnight gains, and from 2008 to 2017, they were neck and neck. Meaning, if the market gained 40 basis points overnight, so did the S&P, and it intraday, and it wasn't exactly tight, but it tracked pretty closely. And then for whatever reason, that completely broke down from 2017 to today. Again, I don't know what happened there.
Ben's theory of markets, everything is happening faster.
So Ben Eifert and people like this have been talking about market structure for a long time. Something is different. So what's really interesting is that if what's going on in the YOLO trades starts to affect professional strategies. For example, Corey said, if you have these frothy situations where an individual security is not necessarily creating consistent gains, but you're seeing something like a GameStop or a plug that is dramatically jumping within a 1 month period, well, momentum investors, if they're not careful, are going to start picking up on those names. And they may be able to ride the wave of retail if that's truly what's influencing it, but they also may ultimately end up being the bag holders as retail moves out of these names and into something else. Ben, would that be insane? How many momentum ETFs are there that don't necessarily smooth out for price volatility, where they just do a 3-6 month look back, whatever it is, and the top performing stocks, they get included? And to Corey's point, if by the time they're included in the ETF or whatever strategy it is, it could be an SMA, whatever, the Wall Street bets people have moved on to something else, this could seriously start to have some impacts.
I mean, I talked about youngs beating olds of late in terms of philosophy, but isn't it wild how the retail investor has basically beat the pro for the last few years? The adoption of Bitcoin was all done at the retail level, and institutions are just now piling in. So those early returns went to all individuals for the most part, right? Now, some of them were already wealthy and tech people, and the Robinhood people beat the pants off of Warren Buffett and all the hedge funds last year in 2020 because they dove in and bought when everyone else was running away.
Speaking of Warren Buffett, Jason Zweig did a post on every Warren Buffett needs a Charlie Munger over the weekend. And I'm not exactly sure. I was sort of confused by the language.
By the way, are you my Munger or am I your Buffett? Or wait. Sorry.
But so in the article, Jason mentioned something about The American Association of Individual Investors, which tends to be a much older crowd, I think they're shutting down.
This was kind of a throwaway line at the end, but that's a big organization, and people have used that AII data for bulls and bears for a long time, and it sounds like he just said he learned that they are going, they have a nonprofit, they have 154,000 members, notified its chapters last month would close down as of February 28th.
So the fact that they're shutting as Wall Street Bets, FinTech, you name it, is ramping up, that was a stark contrast. So this is happening all over the place. E-Trade reported growth of 900,000 net new self-directed accounts. Schwab's average client weekly trades, you could imagine which way this is going. It looked like they were doing
Schwab was down this morning, people were saying.
Schwab was doing under 5 million trades back in October, over 8 million daily trades today, which leads us to...
By the way, how many people at these places are calculating how much they're losing from 0% commissions?
Oh, it's a good
versus
point.
the past. Obviously that's helped them get new client anyway.
Yeah. Anyway, I bet you, if I had to guess, that Schwab has more than made up the difference for what they're charging.
True.
Or not giving out on the cash. All right, let's get to GameStop, the gorilla in the room.
Okay, before we get into the details of this one, I just want to lay this out. GameStop itself and Wall Street Bets, for everyone making the comparison, this is not 1999.
Explain.
Okay, this is a company that's been around for a while. This kind of stuff was not happening in 99 where, think about it, this is a company that had more shares sold short than it had shares.
Okay.
The hedge funds were betting against this. This was a stock that had been falling for years, and people were saying it's one of these stocks that's going to die in the mall like all these other retailers.
I shorted GameStop in 2012.
Wow.
Not a joke.
Bad. People were betting against this. They were betting this is a bunch of people who are betting against a company.
Okay.
And then this other group comes in and they say, all right, we're going to use that against you and cause a short squeeze. This is not 1999 was people betting on the new economy. Think about, GameStop is going
I think you're splitting hairs.
Listen, the S&P is flat today. This is not the market going insane and going on a tear and melting up. This is small stock. GameStop was $1 billion company 2 weeks ago. Now it got to 7 today and back to 5. It's moved around so much, but this is different than 99. This is more coordinated. This isn't like IPOs popping. We had that earlier, granted, but GameStop is not 99. This is something totally different and new.
Well, you can make the case that with the message boards, it's exactly 1999. Maybe not.
That's part of it, but in 99, people were holding on to these and it was going to be life-changing money. These people are planning on trading it and saying, see you later. This is not like people buying and holding this stuff.
I think you're being pedantic.
Okay, I'm just saying, if this was happening in 99, they would have been taking stocks that came out in the 80s and saying, let's screw with the short sellers for that. That is not IPOs popping 400% on the... This is a different level of emotion that we've never really seen before. Granted, it's the message boards, like you said, but this was a company people were betting against. This is pessimism versus optimism, and optimism won.
Optimism? Really? Nobody's optimistic about GameStop.
People are turning it into optimism now. There's all right.
I think that I don't know if we've ever seen a company more like, I'm sure that there has been examples of this. Volkswagen, by the way, the short squeeze in Volkswagen made it one of the biggest companies in the world back in the day. But GameStop at this point is this has nothing to do with fundamentals. This is completely supply and demand.
Okay, so speaking of fundamentals, so back in my manager days, I mentioned we used to allocate to hedge funds. And so you have to ask these questions to sound smart. So you say, what are your risk management on position level sizing? And they'd say, well, we don't take more than 2% for a position in a short, and we don't have more than 20% industry concentration or whatever it is. But one of the things that a lot of the long short funds would tell us is we never short a stock that has a bar rate over X, call it 20%, whatever it is, because some of these stocks that are so overvalued, they're hard to short because you have to pay more.
What is the bar on GameStop these days?
I was wondering that today. But the other thing is,
by the way, I tried to short GameStop in our wealth-based paper account, and literally it said there are no shares to borrow in the paper account. I couldn't believe it.
But the other thing is, these certain hedge funds had a threshold in terms of if there's more than 30% of the stock that is sold short, we will not take part in that because you could have a squeeze. So how do these hedge funds explain to their investors what the hell were they doing? you were ripe for something like this. You were ripe for a squeeze. I almost blame them as opposed to blaming the Wall Street Bets people for this. It's almost their fault.
You know what this has eliminated? Remember like when at Irisone, when people would get on stage and do like a 100-slide short pitch? Can't do that anymore.
And that's gone. No way. I wouldn't be caught dead doing that.
Let's get into the GameStop stuff, and then we'll circle back to some stuff that's going on with short interest. There's an account on Twitter that we'll link to, Market Stream. They said the YOLO index, which tracks the short-term performance of Wall Street Bets and other trading subreddits, is up 916% since January 1st.
Is there a YOLO ETF yet?
I mean, since January 1st, Zero Hedge tweeted today, a basket of the 11 most shorted Russell 3000 stocks is up 100% today. Today.
Okay, here's another one. GameStop has traded more shares today than the S&P 500 ETF. This is a tiny company in the grand. It's a mid cap now. It was a small cap, basically.
So, not to brag, I did a post. I don't know if you remember this. I did a post in May 2018 talking about how GameStop was a deep value stock. It was trading at 0.15 times sales. And the irony here is that I forget who from Bloomberg did a deep dive into the history of GameStop and what actually happened at Wall Street Bets. The first post was a fundamental thesis. Here's a quote. My thesis is not contingent on a turnaround or business expansion. This is solely a deep value play, which is incredible. That's how it started. We know how it ended. And here's a quote, Ben, that supports the fact that they're getting smarter. Somebody wrote on the message board, if you are long GameStop, make sure to call in your shares from your broker and make sure they aren't being short lent. Call your brokers.
Right. They planned this out. And apparently the people who did it the most, like the way that they laid out the case for what's going to happen, they followed that plan to a T.
They nailed it. I mean, this was precision.
Okay, so here's the other side of this. The SEC is coming after their ass. I'm putting it down now. These message board kids, they better sell some shares and start a defense fund because there's no way the SEC can let this keep going on.
So somebody, we had a listener question about the market manipulation, what's going on. 2 tweets from today that I thought are worth noting. Weisenthal tweeted, I hope regulators are watching Wall Street Bets. Manipulating the market should be reserved for rich hedge funders with 200-page slide decks delivered to exclusive audiences behind closed doors. So that's the whole thing. They're going after the 1%. That's exactly what's going on. Yes. Robinhood is actually taking from the rich. It's incredible.
Maybe looking beyond that, like, can we just step back and appreciate, like, there's nothing to do right now. We're in a pandemic. Can we appreciate just the fact that this is kind of fun?
Oh, this is the most fun. Last week we said Bitcoin was the most fun. Remember Bitcoin? That's so boring.
GameStop has totally sucked the oxygen out of the room for a Bitcoin bubble. A lot of people are like, want to play the tisk and wave their finger and say this is going to end badly, but I'm sorry. This is entertainment for right now, and I love it. I don't even care that I'm not involved in this at all because it's just fun.
Texted a friend, I forget who. I said, I'm not even playing and I'm giddy.
Yes.
Dave Natick tweeted, I see lots of traffic about GME and whether some law is being broken. Allow me to introduce you to 10b5 because I suspect we're going to be talking about it a lot. You think there's going to be prosecution here? Who do you prosecute?
The people on the message boards. You think they can't go after them? So Michael Lewis's book Next that I mentioned, the whole story revolved around a kid who was like 12 years old at the time or 15, I can't remember. And he was pumping up stocks on Yahoo Finance message board, and they went after him because he was making so much money. It is fun. I mean, just like play the reverse in your head. If hedge funds were doing this to a retail stock that everyone had shorted, if it was the other way around, and hedge funds, and obviously you got to imagine hedge funds are in this thing. We're not seeing this much volume and this much movement just from people in the retail account. The smart money, professionals are in this for sure.
The smart money is following the dumb money.
Oh, I'm sure. And I talked to someone from the Wall Street Journal this morning. They had some questions on this. They said, off the record, we've talked to some hedge funds.
Well, hold on. If it's off the record, you can't.
No, off the record in terms of them not wanting to say who they are. But they would say, we're paying attention to this stuff, but we just don't want to say it because we'll feel or sound like idiots. But you have to just to know that you're not involved in one of these things, probably, right?
So let's rewind. How did this all start? So back in August, Ryan Cohen, who is a co-founder of Chewy, disclosed a 5.8 million share stake in GameStop through, I guess, one of his funds. and shares surged 24% on that day. Do you remember that? I don't really remember that story.
It sounded like that's what got the ball rolling. But at the time, this was a tiny stock that no one cared about.
Yeah.
It was at $4 a share or something then.
So Wall Street Bets took an internal survey. So again, we haven't vetted this. So let's just take it with a grain of salt. Apparently, they own almost 6% of GameStop.
Okay. I would cut that in half if we're being honest with the survey results. I'm sure they're all saying they own more than they do, but that's still that's a big number.
So I think that this is an age thing where if you're a young person, if you don't have a mortgage, if you don't have a lot of money, if you have all the time in the world to make up any potential losses, why wouldn't you be involved?
Yeah, you wrote a good piece about this over the weekend where you said, like, if you have a family to provide for, you can't be YOLO trading. Like, so last week we talked about that NIO stock, the electric vehicle company, and we both said we had never heard of it before, and we got dragged big time on YouTube comments. We were getting dragged for being boomers, which, by the way, I thought that was kind of funny at first, like the boomer joke. I think it's kind of lost. It's been beaten into the ground like everything else.
You can't call us boomers. I mean, I'm 35.
Right. So they were calling us boomers and saying, like, because we'd never heard of it, like, how do you guys do your job if you've never heard of this stock before and not understanding what our jobs really are?
I guess for the record, I have heard of it. I don't know what it is.
But this is the good thing I think about getting older. You don't have to care about every one of these. It can just be something that you pay attention on the periphery. Like, you don't have to be involved in everything. And I think that's probably one of the dangers of being an investor today, is assuming that you have to be involved in everything. And if you miss out on something, you are really missing out. And because there's so many avenues to invest in these days.
All right, so we're gonna dive into the Wall Street Bets. We spoke about how this is, young people go nuts. Like, I was born 15 years too early. I would 100% be involved here. I probably would be short, but
I was gonna say you would have been shorting it the whole way up.
So somebody posted, took my dad's life savings and YOLO'd into BlackBerry. I told him it's either retirement on a yacht or food stamps for him.
Okay, this is another reason. This is not 1999. These people are going after the crappiest stocks. So it's BlackBerry and AMC movie theaters. They're looking for these stocks that are so tiny.
The junk was popping in 99 too.
But this is different junk. These are old companies that are like on their last legs, unless they start selling some equity here. It's AMC Theaters, which is just teetering on bankruptcy, and BlackBerry, which hasn't been relevant in 7 years or whatever. That's why this is not 1999. They're not betting on a future technology. They're betting on these old pieces of crap that they can move.
With high short interest. By the way, is short interest like a factor now?
Now it is. I'm sure it has been. But
so, all right, let's get to the message board. And there's some vile language in here that we have to disclose ahead of time. So if you're listening with children, maybe fast forward like 2 minutes.
By the way, I still don't know. People keep saying, like, you got to get on the Reddit message board. I still don't know how to do it. So I'm just I go by screenshots. That's all I can do.
All right. So here we go. Boys, it's pretty simple. If we break 115, we trigger another gamma squeeze on top of the short squeeze. How? 115 is the upper limit for calls. There are no calls available beyond 115. If we hit it, that means all calls will be in the money and market makers will have to buy more shares to hedge and initiate any gamma squeeze. So don't be pussies and just hold because we're just getting started. So Ben, this goes to your point of, like, this is not a dumb person. I mean, the language aside, this is very much, they know what's going on. Somebody replied, it's been a fun ride, retards. I have to cash out pretty much all of my positions today because I'm putting money down on a home for the first time in my life. Hope to get back into the market someday. Somebody responded to him, double your positions and buy the moon. Somebody responded to that person, literally wait a day, bro. Today is going to be fucking nuts in the market. Later on, somebody posted, greetings, gentlemen. I just got back from my 2-day ayahuasca retreat in Peru. I have found clarity and the answer to all my life's questions. And they put some he recommends GameStop and Palantir calls. Anyway, so this is the type of language and behavior that's happening on these message boards.
So I'm just saying, this stuff is out there for the regulators to see. You don't think the hedge funds are going to be pounding on their doors saying, hey, we've been paying you so much money.
But what do they do? Like, how do they prosecute all of these people?
I'm sure that they could take one of them and make an example of them, and that would quiet down the other ones very quickly.
But what about if these people are all anonymous? I guess they could have their addresses, but that's why the blockchain fixes this.
I'm sorry. You don't think that the feds can figure this out? I told you, I've said this story on the podcast, I think. I had a friend in college. He was a freshman in college, and they brought him up for pumping and dumping penny stocks on the Yahoo Finance message boards. He probably had $1,000. And the funniest part of it was his lawyer told him to plead the fifth. So he had to plead the fifth like 112 times. But we were thinking in college, like, why would they go after him instead of someone big, a huge whale who's doing something that actually makes sense and matters? But the point is, you're making an example so other people don't do this because it's easier to prosecute the little guy like this than go after the big guy.
I feel like the upside is too rich that people will take their chances. I mean, we'll see what happens. So Sentiment Trader, speaking of how it's different this time, Sentiment Trader tweeted, "We're seeing the types of speculative activity almost solely seen near short to medium term markets peaks. We're also seeing the kind of thrusts and recoveries almost solely seen near the beginnings of long-term uptrends. It's very strange."
Markets are broken right now, or just is that the general thesis here? I just think, getting back to, we've talked about this for a while, the anecdotes and the sentiment indicators, like, I think you have to almost throw them out the window in terms of like trying to find the turn.
Well, that's the key point. Dude, this is insane. We are surrounded by bubbles. But in terms of using these indicators as anything other than, that's interesting, that's insane, you can't, they're not actionable. We got an email over the weekend, and this is just, one anecdote of a bazillion. "Hey, Michael and Ben, first time, long time. I think my friend has gone completely off the Bitcoin deep end, but what your thoughts? He is a part-time MBA student and his grandma gave him $9,000 last week, which is to be used for his upcoming semester's tuition. He said that the tuition bill isn't due until May 1st, so he wanted to try to make a trade with it instead of letting it sit. I figured, okay, maybe he'll put it into SPY or something, but nope, he's going to take the $9,000 and put it all into Bitcoin in hopes to try to double his money between now and the end of April. And then we'll have essentially 2 free semesters of college rather than just 1. So replace Bitcoin with anything. This is happening all over the place."
I almost respect this strategy in some ways, even though it's ridiculous in nature. But like, to your point about not having responsibilities, like, when else would you take risks like this?
If this person loses that money, then he'll have some debt, right? He'll have to take out a loan and pay for college that way. By the way, people saying this is going to end badly, for who? I mean, yes, of course. I mean, that's ridiculous for who? How many people lost millions of dollars today up and down with the GameStop thing, right? But that person that has a $10 million account on GameStop, or the guy that has $11 million in Tesla, it's not like they're taking the 10 million and buying more options. Like, they already won. Can they give it back? Some of it back,
Right.
all of it back? But there is a lot of people that have already won the game. And they're not necessarily, it's not like they're selling naked options. I mean, again, some people will blow up spectacularly, but there's got to be tens of thousands of people that have already won.
These people are cashing out, and they're saying, "I'm going to use this money to buy a home or pay off my student loans."
So by the way, that's what I'm talking about the reflexivity of what's going on in the market. I think it all started inside the S&P 500. Then it went to Bitcoin, then it went to this, then it went to that, and people are using the gains to prop up other shit. You see what's going on with like NBA Top Shots, these freaking holograms? Like, I thought you could just watch these on YouTube, but apparently people are paying tens of thousands of dollars for a video clip.
But here's the thing. GameStop goes to zero, there's basically no impact on the stock market overall. That's the thing, why it doesn't matter in terms of like an overall bubble. Like, we've talked about micro bubbles, that these little speculative names can go out of business, and it's not going to matter if it doesn't carry over to Facebook and Amazon and Apple and Microsoft.